Good day, my name is Temba. I'm with my colleague Anelda. We're tax honor students from the University of Pretoria. Today, we'll be taking you through turnover tax. Firstly, we'll discuss what is turnover. And turnover refers to the sales or revenue that the business makes from selling its goods or providing services. For example, if the business is in the business of selling fat cooks, whatever money the business makes from selling those fat cooks will be regarded as its turnover. So as we'll be discussing turnover tax, attached on the screen is the tax table for turnover tax for micro businesses. So if the business has a financial year that is ending on any date between the 1st of March 2020 and the 28th of February 2021, they'll be applying this tax table. So for example, if the business is making less than 335,000 in turnover, or rather in taxable turnover, then they will not be taxed. Now that you know what is turnover, it's time to discuss what is turnover tax. And turnover tax is a tax system which is tailor-made for micro businesses to make it easy for them to meet their tax obligations. Turnover tax is not an additional tax. So if you're registered as a company, you won't be taxed on the company tax rate as well as the turnover tax rate. You'll only be taxed on one of the tax rates for your turnover in relation to your micro business. Turnover tax is worked out by applying a tax rate to the taxable turnover of a micro business. The tax rate have been shown on the previous slide. The year of assessment ending on any date between the 1st of March 2021 and 28 February 2022. So if you're not registered as a legal entity, your year of assessment will always end on the 28th or 29th of February of each year. You might be wondering, who is turnover tax for? And to answer that question, turnover tax is for micro businesses with an annual turnover of 1 million rand or less. The following taxpayers, but not limited to, may qualify as a micro business. Individuals, also known as sole proprietors, partnerships, close corporations, companies, and cooperatives. So remember the definition of turnover. So if your turnover for the year is less or equal to 1 million rand, then you may qualify as a micro business and also be eligible to be taxed using the turnover tax rates. How do you register for turnover tax? So you'll fill in the TT01 application form for manual and online applications. The TT01 form is available at your nearest SARS branch for manual application. However, it's also available online on the SARS e-filing website. Now that you know how to register as a turnover taxpayer, the next thing we'll look at is how to obtain a turnover tax return. For one, you could visit a SARS branch. Alternatively, you could complete the TT03 form online, which is available on the SARS website at www.sars.gov.za, then selecting tax types, then selecting turnover tax. An example of the TT03 form can be seen on the screen right now. During the coronavirus pandemic, it's advisable to rather try and do it online. Next, I will hand over to my colleague Anelda to take you further.
Next, I'm going to explain how to submit a turnover tax return. The TT03 should be submitted on an appointment basis via a SARS branch, electronically, or by making use of the following postal address, which will be your PO Box 436 Pretoria 00001. A turnover tax return, as discussed above, should be submitted on an annual basis between 1 July and 31st of January of the following year. Moving on to the 3 successive payments of turnover tax. This is where the first payment will take place in the middle of the tax year on the last business day of August, which will then be 15% of your total taxable turnover. The second payment will therefore be at the end of the tax year on the last business day of February, which will be the 65% of the total taxable turnover. Final payment is then after the annual TT03, which will then be 35% of the total taxable turnover. It is very important to keep the following records in place. Firstly, the detailed receipts received during the year of assessment, the dividends declared during the year of assessment, and then a detailed list of each available assets as well as all the individual liabilities where the cost price is more than 10,000 Rand at the end of the year of assessment. So maybe some of you have been wondering, what happens if I have a turnover tax of more than 1 million Rand? Well, if your business has an annual turnover of more than 1 million Rand, your business will need all their records in order. If your business is a registered company, it will be taxed at a rate of 27%. Your business can still qualify as a small business corporation if it meets all the requirements and then enjoy those tax benefits. If the business is not a registered company, the tax bill will need to apply the normal tax rules according to the individual's tax. It's therefore very important to note that turnover tax is not an option if the business intends to grow and is therefore only applicable for a micro business who will remain small. So now the question you all have been wondering about. What are the benefits of turnover tax? Firstly, it requires less documentation, which will result in a reduction of administration costs. And then secondly, small businesses will only pay turnover tax instead of various other taxes, such as VAT, provisional tax, income tax, and capital gains tax. Lastly, if you require any further information, please contact SARS via the SARS Contact Center or visit the SARS website at www.sars.gov.za or visit the nearest SARS branch. Thank you so much for taking the time to listen to our presentation.